We're all aware how interconnected the financial systems of the world are, and every time the Fed in the US makes a decision, it tends to affect markets across the world. But one of the benefits of investing in Africa is that these economies are transforming and changing from what were quite agrarian economies to become more urbanized and to become more industrialized. And as this happens, it tends to march to its own drum. And so what's nice about that is that you can get returns in Africa that are not correlated or linked to the rest of the world. And if we look at African equity markets, there's only a 0.24 correlation to the rest of the world's equity markets. So that's very low, and that means that you can get returns when other markets are going down, and that's very good for investors if they want to make sure that they get different returns over time. If you look at South Africans often think that being at the tip of Africa, we're quite interconnected with the continent, and that may be true for some of the larger businesses in South Africa who have businesses across sub-Saharan Africa and business interests there. But if we look at the equity markets, we see an even lower correlation of 0.2 between the South African equity market and that of the rest of Africa. And that probably is because South Africa is such an open economy and so linked with the rest of the world that it's got pretty high correlation with the rest of the world's equity markets. And so for South Africans who want to diversify their returns and get different types of returns, they're probably better off taking money into the rest of Africa than they are taking it into emerging markets or developed markets per se. Certainly the correlations are lower. And if you believe that Africa is going to be the place to be over the next 5 to 10 years, it's certainly somewhere to put a portion of your money. And the finance minister recently announced that you can take up to 10% of your investment money and put that into the rest of Africa.